Happy Agent Tip Day. So this one is going to save you some money or make you some money, depending on what you're doing now. This is about mileage. Okay, so as a real estate agent, or as a business owner of any kind, if you are driving your car, like to classes, to showings, to listing appointments, to buyer appointments, to anything, like going to the bank to cash your check, going to the store to get supplies for an open house, going to the open house, checking on listings, anything to do with your business, anything to do with real estate, you should be tracking your mileage. And it's even more important now because the IRS just gave us more money per mile, which is super cool. So, as of January 1st through January 30th, it was 72.5% per business mile. Now, I travel a lot, a lot, a lot. This is basically my largest write-off for real estate. And yes, I pay brokerage fees too when I sell something. But like, let's say you have 1,500 miles, which is extremely low, at 72.5 cents. Oops, I'm sorry. Let me 0.725. You're looking at 1,087.50, okay, that you can take off your taxes just for 1,500 miles. Now, I'm like, I do 1,000 miles easily a month. I mean, probably closer to 1,800 miles a month. So if you are driving like I'm driving, let's say 1,800 a month times 12, that's 21,600 miles. Now let's see what that calculates to at 72.5 cents per mile, $15,660 off your tax amount. Okay, that's off your taxed income, a deduction. So if you made $80,000, you can take over $15,000 off and get taxed on that lower amount. Now, that's even more important because that was through June 30th that it was 72.5. It has now gone up, and the new rate is 76 cents a mile. 76 cents. And that starts in July 1st, right? So retroactively to July 1st through the end of the year. So now let's say you had that 1,800 miles. Just 6 months is 10,800 miles for 6 months times 76 cents. That's 8,208. Plus you add in what your mileage was from the 1st of January through June 30th, and you're saving even more. So I don't know if you drive as much as I do, but if you're a full-time real estate agent and you're not tracking your miles, you are losing money. You're throwing it out the window. Why do that? Like, why do we need to pay the IRS more than what we need to, right? So if you're like a lot of salespeople, really like paperwork is such a hassle and you don't really want to keep up with things like that. That's okay. There's an app that you can use. There's actually plenty of apps that you can use to help with that. So on the App Store or Google, I don't know what it is. If you're if you're not an Apple person, I'm an Apple person. Sorry. I know that there's like a place you can go and purchase apps on Android. Anyway, Mile IQ, I think is probably the most popular. It has the most ratings. That's what it looks like. Okay. Mile IQ has 108 5-star, 108,000 5-star reviews. So that's a fantastic thing. I'm going to actually, well, no, I don't need to do that. Whoops. Okay, now I'm losing you. There are some others. For a while there, I was on QuickBooks Self-Employed. And QuickBooks Self-Employed allows you to track your mileage as well as your expenses. You can link your business account to it. I recommend that you do have a business account for your real estate, that all of your income goes in and all of your expenses come out of. Makes it a lot easier at the end of the year to do your taxes, even if you're just giving it to a CPA to handle. But there's tons of different mileage trackers that you can do. Most of them, what they do is they buy GPS, they go with you. So if you are starting a drive, it can tell you're driving, not walking. So it will start up and it will record your drive time, right? Now, most of these you do have to say, oh, this was for business, this is for personal. This was for business, this was for personal. And that's where I don't do great at that. And I don't know what it is. I'm pretty techy, but there are a couple things that are old school that I do. One of which is have a physical book, like this is my book. I'm sure you've all seen it with my list and my dates and my calendar and all that. So I can keep track of things that are going on. I know that's old school. Not everybody wants to do that. But if you are old school like me, and for whatever reason you do not do the swipe left and swipe right on a regular basis, and you end up in October going, oh my gosh, I have no idea if these are business or personal, and you're having to go through for like 3 days straight. That's what happened to me when I tried to do an online thing like that or an app. It didn't work for me. So I went back to this little tiny book. It's called Vehicle Mileage. I get it at Staples. It's like less than $5 a year. Of course, it's tax deductible. And then I write in where I'm going, the reason I'm going, my starting mileage, my ending mileage, and I keep up with that. And so this goes with my taxes. Um, you know, like every month, I can total it at the end of the month, and then I can total at the end of the year, and then I can report on my tax documents that yes, I do have a paper copy or I do have a printout to prove the mileage, and that usually will allow you not to get flagged. No red flags here. I don't want to ever be audited, even though, you know, I do everything by the book. It's still what a hassle that would be. So anyway, that's my short little agent tip of the day. If you are not tracking your mileage, and track other things too, like any business expense, this, even if you end up and like with a negative at the end of the year, like let's say you've made $20,000 and then you have driven all over the place, but you've only made $20,000, which is very, very low. But let's say that's all you did, and you can prove your mileage is $15,000 and you have a net of 5,000. Well, you've paid broker fees, you've paid monthly fees, you may have paid a board fee. I mean, look at all those other expenses too. You might get down to the point where you don't even owe the IRS a thing. And wouldn't that be a beautiful thing? So I just want to encourage everybody to keep up with this stuff. It's important. You're a business owner. This is part of a business expense and benefit that you get as being a business owner. So have a great day. Oh, by the way, that law went into effect July 13th. So it's very recent, just 3 days ago. But they did make it retroactive to July 1st. And you can find that anywhere that you look. I got an email actually that told me about it, and I double checked to make sure it was real, and it is. So have a great day. God bless, and keep up with that mileage. It's super important. Oh, one other thing. If you don't track your mileage and you have a vehicle, and let's say you buy a nice vehicle every 3 years, or you lease a vehicle and you turn it in every 3 years, there may be other ways. I don't know about leasing, but definitely if you purchase something like that every 3 years and, rotate your cars or whatever, my CPA told me that that might actually be a better option to do depreciation and actual expenses. And if that's the case, you don't have to track your mileage. You have to keep all of your receipts for your gas, your oil changes, any tune-ups, any tire rotation changes, any kind of maintenance that comes up, even car washes, like anything that you do to your vehicle is then a deductible item. But okay, it's only if you trade in your cars like every 3 years or so, because otherwise it doesn't make any sense. Your mileage will cost much more with that deduction than it would if you were depreciating a brand new vehicle. So over like say 5 years or 10 years or whatever, if you keep your vehicles longer than 3 years, go the mileage route. And definitely talk to your CPA about your vehicles and how you work with that, because I'm not a tax person. I just follow what works for me. And I have a 2020 car. So obviously my mileage is going to make me more money than depreciation. So anyway, I hope that helps. Have a great day and God bless.